Hello everyone, good to see you back in this bite-size number 10 for Tembusu Grand. Today we're going to analyze the land cost and we're going to dive deeper into the case studies as well. So Tembusu Grand resides in D15 in RCR, City Fringe. So let's take a look at all the RCR land cost. So Tembusu Grand, you realize looking at this line chart, ranging from Tembusu Grand, former Euro-Asia, Terra Hill, Pine Grove, Bukit Timah Link, Daman, which is currently known as the Grand Daman, former Lavelle, the Continuum, Mayor Park en bloc. You realize one very interesting insight. Did you realize Tembusu Grand has a low land cost advantage? So this low land cost advantage, what exactly it means to potential buyers and potential investor? Before we go into that, that is the table for your easy reference from number 1 all the way to number 9. You realize the margin from a 1668 current and latest land cost versus a 1302, we have close to about $360 of safety margin. Okay, what do we mean by safety margin? To understand that, let's go into the case studies of finding out the relation between a land cost as well as the launch price. Are there certain relations? We actually sieve out the property in the east. One case in point, Bedok Reservoir. The land cost then was bidded at a 465 per square foot per plot ratio back then in 2011. And another project known as, that is very nearby in the east, Eco, the land cost is 534. And if you go another nearby project as well, called the Glades, the land cost is 791. And if you go into this particular one, and I'm pretty sure you will know because it's being launched recently, we call it the Seneca at the Seneca Residence, very near to the Optima, we call it the Tanah Merah MRT station. The land cost is 930. So if you put all this land cost side by side together with the launching price, you realize that there's one interesting insight. When the land cost is low, the launch price is low. So as you can see from Archipelago, the launch price is 1106, Eco 1187, the Glades 1489, and Seneca 2098 per square foot. The yellow color price, that is the yellow font that you see, the background font that you see is the launching price based on the trend line analysis for all the four different projects. And if I put these two lines together, Archipelago land cost that represented the blue line, the land cost for Archi, Eco, the Glades, as well as the Seneca, did you realize there's a strong correlation that when the land cost is low, you see that in my cursor? When the land cost is low, the launching price is low. So data does suggest that there is an advantage if you enter in a particular project with low land cost because the safety net, okay, is very high. You got a higher safety of margin. So for investor who wanted upside potential and also at the same time don't want to take too much risk, having a low land cost advantage is a plus. And I hope today's session will give you that insight. And coming a little bit about the recent Business Times article, government is very clear, cutting land price way to go because it risks destabilizing the HDB market and also the entire property market. Another articles in recent times by Sim and one of our ministers, he mentions drastically lowering BTO prices will end up hurting Singaporean. As state land forms part of national reserve, not paying back fair market value of the land, in effect, run down the value of the reserve. So there's a huge negative implication. We don't sell the land at fair market value. This is what the minister saying. And this, if you don't have market value, it will be detriments of the current and future generations. And it's something that the government, okay, stand firm to want to sell the land cost at market value. So when you know that, you realize that bringing back to Tembusu Grand, having had the low land cost advantage of 1302, and if going forward, it is the government's stance that they always want to sell the land at market price, you know, in the long term, say 10 years from now, chances is very high that will the land cost be higher 10 years from now? Think about it. Inflation, land become more valuable, land limited in Singapore, effective government, good government. 10 years from now, would land cost be higher or lower? So that translates to a very positive low land cost advantage of 1302 for Tembusu Grand. And if you put that relation in time series, just in 2023 February, the same RCR location, the City Fringe D15, Mayor Park, was on block at a land cost of 1668. So this is another case in point of that high safety margin. 1668 less the 1302, we are talking about a safety net of about $360. And going forward, another 10, 20 years, do you think land costs will be any way higher? Think about it. So I hope today's insight on the land cost advantage will give you that very insight. Why, given the statistical analysis, why having the low land cost, you have that safety net. And I hope today's session is useful, and see you next round for the next bite size. Bye.